Hello, welcome to TEA's Federal Fiscal Compliance and Reporting Division's presentation on the ESSA fiscal requirements for Title I Part A Comparability of Services. This presentation will specifically review the reporting and documenting of state and local expenditure-based salary data. The presentation is based on the viewer being familiar with the comparability requirement and having viewed the Title I Part A Comparability of Services overview presentation. So, let's begin.
This is the standard TEA disclaimer. It explains that this presentation is intended solely to provide general information and guidance to LEAs. It reflects TEA's current understanding of the applicable federal guidance, and it does not constitute legal advice.
Based on last year's validation review of LEA comparability documentation, TEA has identified some common issues which are occurring among LEAs, and we believe additional clarification is needed on these items. For the most part, LEAs are applying the Comparability Computation Form guidance correctly in regards to such items as grade span groups, high and low enrollment splits, and other items. The issues identified are not occurring within how the LEAs are conducting their testing. Rather, the issues are occurring within the data that LEAs are using in the comparability calculations. One common issue across all data is the source of the data. The fiscal requirements for the comparability requirement are federal law. Because the consequence of non-compliance with the comparability requirement is the return of all Title I Part A funds for the fiscal year, TEA collects the comparability data during the fiscal year under review. This allows for any non-compliant campuses to be brought into compliance with the requirement. LEAs are required to test for compliance using current year budget data. The term expenditures is used, but because the requirement is tested during the current year, LEAs must report budget data where applicable. Because LEAs are required to test for compliance using current year budget data, the LEA should not report the previous year's data or the current year's total expenditures to date. For example, for school year 17-18, LEAs should report the 17-18 enrollments, the 17-18 state and local budget amounts, the state and local FTEs, etc. State and local base salary data. 6 common issues when reporting state/local base salaries are not excluding salaries paid with federal funds, not excluding salaries paid with supplemental state and local funds, optional, not excluding salaries paid with supplemental state and local dollars consistently, and not excluding staff salary differentials for years of employment. The remaining 2 common issues when reporting state/local base salaries are not including all staff considered instructional staff, not having auditable documentation to support the reported state and local base salaries. Success tip for reporting state and local base salaries. Exclude federal funds. No salaries or portion of salaries paid with federal funds can be included in the state and local base pay. In the comparability instructions, Appendix 2, codes used in comparability calculations, you will find a list of all state and local fund codes that are required to be included in the calculation. This list is applicable to the state and local base salaries that are reported as well. The comparability instructions can be found on TEA's Title I Part A Comparability of Services webpage. Success tip for reporting state and local base salaries. Exclude base salaries paid with supplemental state and local dollars. Public Law 115-64, Section 1118, Fiscal Requirements D, Exclusion of Funds, states that an LEA may exclude supplemental state and local dollars. This statement applies to salaries paid with supplemental state and local dollars. It is not a requirement to exclude supplemental state and local dollars. However, excluding salaries paid with supplemental dollars creates a more accurate picture of your LEA's campuses, which makes it easier to come into compliance with the testing requirement. Certain services are meant for specific students, so salaries paid with supplemental state and local dollars can vary from campus to campus based on the student populations. Excluding these salaries paid with supplemental dollars can be critical when coming into compliance with the testing requirement if the number of salaries paid with supplemental dollars varies greatly from campus to campus. If an LEA chooses to exclude supplemental state and local based salaries, it must do consistently across its LEA. Appendix 2 of the Title I Part A Comparability of Services Handbook provides further information on supplemental state and local fund expenditures that may be excluded from comparability testing. Thus, an LEA may exclude salaries paid with supplemental state and local dollars for the following special programs. Language instruction educational programs such as bilingual education for children with limited English proficiency, English as a second language ESL services, excess state and local costs of providing services to children with disabilities as determined by the LEA, state or local supplemental programs in any school attendance area or school which meets the intent and purposes of Title I Part A. Success tip for reporting state and local base salaries. Exclude base salaries paid with supplemental state and local dollars consistently. If an LEA excludes state and local supplemental dollars from one's campus total state and local expenditures, it must exclude the same supplemental dollars from all campuses' total state and local expenditures. All campuses, all grade span groups. There is no flexibility with this option. Success tip for reporting state and local base salaries. Exclude staff salary differentials for years of employment. Per SS Section 1118C2B, for the purposes of comparability in the determination of expenditures per pupil from state and local funds or instructional salaries per pupil from state and local funds, staff salary differentials for years of employment shall not be included in such determinations. LEAs are required to exclude staff salary differentials for years of employment when reporting state and local base salaries. For example, a teacher with 15 years of experience is hired for a position and paid $115. The position pays $100 as a base pay and then $1 for each year of employment. Many districts call this steps. The LEA would report only $100 for this position. No salary increase for years of employment can be included. This is specified in the law, and there is no flexibility with this requirement. State and local base salaries must also exclude benefits, stipends, and merit increases. We are only looking for the base salary. Success tip for reporting state and local base salaries. Include all staff considered instructional staff. Per USDE non-regulatory guidance on Title I fiscal issues May 2006, if an LEA chooses to measure compliance by comparing student/staff ratios or student/staff salary ratios, the LEA should consistently include the same categories of staff members in the ratios for both Title I and non-Title I schools. Instructional staff may include teachers and other personnel assigned to schools who provide direct instructional services, such as music, art, and physical education teachers, guidance counselors, speech therapists, and librarians, as well as other personnel who provide services which support instruction, such as school social workers and psychologists. Instructional staff refers to numerous categories of personnel and does not mean teachers only. All non-federal positions which provide direct instructional services or services that support instruction instruction should be included unless paid with supplemental state and local dollars. Refer to Appendix 2 of the Comparability Instructions for a list of role IDs considered instructional staff, staff coded as instruction, instructional leadership, or instructional support should be included as instructional. The role IDs listed in Appendix 2 of the Comparability Instructions are normally considered instructional staff because these roles normally either provide instructional services or provide services which support instruction. When in question, the LEA should review the position's job description to make the determination as to whether the position is considered instructional staff for comparability purposes. Success tip for reporting state and local based salaries. Have auditable documentation to support the reported expenditures. Because comparability is a federal requirement, the information reported must be supported by auditable documentation. Official budget records for state and local based salaries are the only records considered auditable documents. For example, computer accounting system records, such as payroll journals reflecting the budget amounts, are considered official records and are auditable documents. Auditable documentation includes reports from the LEA's accounting system indicating the reported budget salary amounts by fund, function, and object code. These reports can be in PDF format. Any other official budget document which reflects approval by the Board of Trustees and/or the superintendent. An Excel spreadsheet with employees' names and salary amounts is not considered auditable documentation. A data export, however, from the LEA's accounting system into Excel with the appropriate notations is considered auditable documentation. All exported data will have notations indicating the scope of the data and the system from which it originated. These are not notations a staff member would make. They are part of the export of the data. Success tip for reporting state and local based salaries. A suggested methodology. It is recommended that the LEAs use official financial accounting system records. For the state and local salaries being reported, obtain the necessary salary/budget reports for all campuses by fund, function, and object codes from your financial accounting system. Exclude any state and local based salaries paid with supplemental state and local dollars. Exclude any and all benefits, stipends, and merit increases that are included in the salary amounts. It is likely that excluding merit increases will need to be done manually. This particular test requirement makes it more difficult to readily obtain the needed information and has the most margin for error. If salaries paid with supplemental state and local dollars are excluded, detail which salaries paid with supplemental dollars have been excluded, have documentation of the excluded amounts, arrive at a reduced budget total to be reported, provide the math used to arrive at the reported totals. For example, if $100 was deducted for supplemental state and local dollars, show your math on your documentation and show how the new total was achieved. All adjustments made to the original salary amounts must be itemized. The original salary amounts, the same amounts as indicated on the original salary report, any adjustments noted, and the final amount reported must be made transparent in the supporting documents. Keep all documents which support the state and local based salaries being reported as per your LEA's record retention schedule. TEA does request this information from LEAs on a random basis. This concludes our presentation. Should you have questions about this information, please email or call us. One of our team members will be happy to assist you. Thank you. These materials are copyrighted and trademarked as the property of the Texas Education Agency and may not be reproduced without the express written permission of TEA, except under the following conditions listed in this slide. For further information, please contact us at the email below.